before that, let's straight away go across to Senco Gold. Stock is surging on the back of a strong set of Q1 numbers. Top line growth at 30%. EBITDA margins have come in at 10%. We have with us Suvankar Sen, MD and CEO. Mr. Sen, morning. This is Rima here. You had guided for about an 18-19% revenue growth for this year. Now, Q1 has been strong, 30% revenue growth, and Q2 is the festive season, Q2 onwards. Can you up your guidance for the full year? What is FY26 going to look like? And what led to the margin expansion to 10%? And can you hold on to it?
So, thank you very much, Rima. The whole objective is that, we have the whole year ahead of us. And in terms of the guidance, we will continue to guide everyone with around 18 to 20%. But now that the Q1 has performed so well with above 30% of growth, I think that achieving 20% should not be an issue. We also need to look at how, we are looking at the numbers as Q2 is in progress and the festive season, in effect, has already started. Dhanteras, Diwali, these are all coming in October, which will be in the beginning of Q3. So I think that, Q2 will have a mixed kind of a reaction with the Shraddh period in the middle. But then the pickup will happen again back to Q3. So I think a 20% is a reasonable target and a reasonable expectation for every one of us. As we cross Q2 and move closer to Q3 end, I think we will be in a better position to guide everyone if there is any kind of an increase. And the reason for the profitability that has gone up, there are basically 2 to 3 reasons. Majorly, what we have seen is that our diamond jewelry sales that has increased largely. Our ratio, which was about 9.9 in the last year, 9.9% has moved up to close to 11% back again. At the onset of this high gold price, people are moving on to buying more of diamond jewelry, and we've seen a 54% growth in terms of sales of diamond jewelry compared to the previous year's quarter. So that is how we are looking at the consumers. They are saying that now gold prices have moved up so much. Let us look at 14 karat, 18 karat jewelry or diamonds studded with those 14 karat and 18 karat jewelry.
So
and now
that
we
was
have also
exactly.
seen.
That's exactly was going to be my next point, because gold prices are at a record high yet again, Mr. Sen. Is this something which is keeping you a little conservative on the revenue growth side? 18 to 19%, you're saying you'll do 20% when you've already done 30% in Q1. And what does it do with diamond sales growth? 30% already in Q1. Will you be able to do better than 20 to 25% growth that you had guided for earlier? Ultimately, what does it mean for your margins?
So see, with the higher increase of diamond jewelry sale, obviously, the way it has impacted in Q1, the margins will be on an upper side and it will improve. But then, what we saw in the previous financial year was that the mood of the consumer toward diamonds were a little lesser, but the mood is changing. We saw it in Q4 of the last financial year. We are seeing it back again in Q1 and Q2 also. The mood of the consumer towards diamond continues to remain robust. Now, 9 carat has also become a part of the hallmarking scheme. So that will only allow the jewelers to provide more lightweight jewelry, which will be affordable, studded with diamonds. And I think that, yes, the festive season is there. But on top of that, what we are more positive about is the wedding season. So in the summer months, we this time never had that many weddings. But post Diwali, Dhanteras, November, December, January, we will have the number of weddings increasing. So I'm sure that, the consumers are just waiting for the right price. Once they realize that, yes, this is the price and the prices will move up further, or there is any kind of small correction, I think consumers will come back to the stores in a big numbers and start buying again. And the respect towards the commodity is very much there from the consumer side.
Multiple positive triggers that you are highlighting, Mr. Sen, but does that be a fair assumption that 6.8 to 7.2% EBITDA margins for this year is an achievable task? Or maybe considering the optimism that you are highlighting, maybe you would want to go to 7.5?
See, I'd rather say 6.8 to 7.2. And I don't want to, make everyone very euphoric. But let's be positive. And I think 7% plus is always a good number, which looks achievable with the current situation that is going right now. And one more thing, I would like to add on to this particular thing is that the monsoons have been good. We are already seeing that the rural market demand is picking up. And I think that, volumes is the only thing that one needs to look at. Volumes have taken a hit. The ability to buy that much quantity of gold for an individual consumer has come down. So we saw in Q1 the volumes of gold getting hit by 2.5–3%. If you look at the YTD numbers, it's down by about 10–12%. So yes, we have to make lighter weight jewelry, make it affordable for the consumer. And I'm sure that they will come back and keep buying gold and silver and diamonds.
So this 10% EBITDA margin, I understand you're holding on to your margin guidance, but this 10% in Q1, other than a higher contribution of diamond sales, studded jewelry, is there any other reason what led to that?
If you remember in the last, interview that I gave on CNBC, our hedge ratio usually stays at about 75 to 80%. But we kept the hedge ratio lower at about 55 to 60% for this particular quarter. I think that lowering of hedge ratio has allowed us to take a little bit of a benefit of the increase in gold price, and that has led to a little bit of marginal impact and positive impact on the overall EBITDA numbers for the Q1 as well.
All right, Mr. Sen, thank you so much for joining in and telling us what we're expecting from FY26. So the start of festive season, that could aid earnings, where there could be Shraddh at the start of Q3. The management is holding on to their revenue growth and margin guidance. Let's slip into a short break. When we come back, we'll put focus on the crypto market with Manisha Gupta on the other side.